All right, so as we start in the week, here's what's going on. The Fed is signaling an extended pause on rate moves, with Powell expected to speak later this week. Markets are watching closely for any shift, especially with inflation risk rising again. Oil is on the move higher after a massive escalation in the Middle East. Over the weekend, Israel launched more than 80 a day during the daytime airstrikes at Tehran and hitting Israel's Ministry of Oil, Supreme Court, and nuclear linked facilities. Um, President Trump now says it's possible the U.S. could get involved militarily. He also said Putin offered to mediate peace in that situation as well. Meanwhile, you have Iran launched waves of missiles into Israel with civilian areas hit on both sides. The Strait of Hormuz remains a critical flashpoint, and analysis say oil could reach over 130 if traffic there is disrupted. Now to grains. Corn positioning remains heavy on the short side. Managed money is set net short 164,000 contracts, while commercials remain long but reduce exposure slightly from last week. That kind of imbalance means any bullish surprise, whether from geopolitics or weather itself, could trigger a sharp reversal. And this is kind of what you have the bulls just living on a prayer, hoping they can get some five handle corn settled. Sold up there. If we do, I mean, there's going to be a hard, fought, grind there. We'll see. Anyways, soybeans, more balanced picture there. Managed money about long 25,000 contracts, up notably last week, a little longer than expected, but we're still probably seeing good weather. Wheat specs are still pressing on the downside, sitting at a net short of 94,000 contracts. That grew last week, but with dryness expanding in Europe and Canada, we're watching for signals of short covering there. On to weather. The U.S. Midwest saw some dryness in the Dakotas and central Corn Belt over the weekend, but rain is expected to improve conditions, trimming drought coverage to just under 10% of the corn and soybean acres. Canadian prairies, however, are turning notably drier, putting stress on Canadian wheat and canola. This could be a global bullish input if it persists. Bottom line, corn may open weaker on weather, but short covering risk in is higher if oil continues higher or if Canadian dryness gains attention. But let's just say it's probably going to come down to the crude oil. If I mean, you would expect some corn reaction if we get corn crude over $130 a barrel. Um, Soybeans look firm still with that energy inflation. Improved soy oil positioning gives bulls a reason to step in. Um, Stay sharp. This is a macro driven tape right now, and positioning could flip fast.